Good morning. It is 9 a.m. Monday, December 13th. I hope this finds you well. The markets have opened up slightly to the downside here this morning. Not a whole lot of movement. The futures markets were showing positive opening here a couple hours ago, so we'll have to just see what the day holds. All right, in this week's recap, milder Omicron news boosted stocks. Let me play the intro real quick, and then we will dive into this week's economic update. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. A more benign reassessment of the possible economic risk posed by Omicron sent stocks sharply higher last week. The Dow Jones Industrials Average picked up 4.02%, while the Standard & Poor's 500 advanced 3.82%. The NASDAQ Composite Index gained 3.61% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, rose 2.74%. Though much is still unknown about the Omicron variant, reports of potentially milder health effects and the efficacy of booster shots ignited optimism that its economic impact would be less severe than originally feared. Stocks rallied higher each of the first 3 days last week, with strong gains in many of the reopening stocks such as airlines, travel and leisure, financials, and energy. The performance of high valuation growth companies was a bit more erratic as they rose and fell sharply throughout much of the week. Weakening Thursday, stocks turned higher on Friday despite a hot inflation number pushing the S&P 500 to a new record high. We've been talking a lot about inflation lately. Well, November's Consumer Price Index, or CPI, came in at a nearly 40-year high, rising 0.8% from the previous month and 6.8% from a year ago. It is the sixth consecutive month that inflation has exceeded 5%. Core inflation, which excludes the more volatile food and energy prices, came in lower, but still posted its sharpest jump since 1991. Economists have attributed this elevated inflation rate to strong consumer demand, a shortage of goods due to supply chain constraints, and strong wage growth. How long this high level inflation persists is unknown, but the Fed has begun considering policy steps to manage it. As always, later on today, I will be emailing out our full economic update for the week, so watch your email, or if you're not getting it, go to our website to subscribe. In this update is also our financial tip of the week. The tip this week is an important tip regarding your legal planning, so be sure to pay attention to that. We also have companies reporting earnings, financial data that we're watching, plus a little bit of fun with a riddle and a quote for you as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.